Elon Musk, the most followed person on the planet, owner of the platform where financial narratives are born and die, publicly called out crypto, called it a scam, called it dangerous, called it a distraction, and then, quietly, methodically, without a single headline, screaming about it, he started building the most ambitious financial infrastructure the world has ever seen, right inside X. Now pause on that for 1 second, because either this man is the most confused billionaire alive, or what you just witnessed was a move, a calculated, deliberate, market-shaping move. And if it's the second one, which I believe it is, then what unfolds over the next 12 to 24 months could be one of the most significant financial shifts in a generation. Stay with me through this entire breakdown because what I reveal around minute 14 completely changes how you see the last 3 years of market behavior. Quick note before we go deep, nothing in this video is financial advice. I'm here to break down patterns, connect dots, and help you think more clearly. What you do with the information is entirely your call. And if you're new here, this channel, the Wealth Continuum, is where we follow the money, not the narrative. If that's the kind of thinking you're looking for, subscribe now. Because what's coming in this video is exactly what this channel was built for. Let me set the stage properly, because this story doesn't start with Elon Musk. It starts with a pattern that has repeated itself across every major financial revolution in modern history. And once you see it, you cannot unsee it. The pattern goes like this. First, the dominant voices publicly reject the new thing. They call it unstable. They call it speculative. They call it a threat. Second, while that narrative is spreading, the same voices are quietly building infrastructure around that exact thing they just rejected. Third, retail investors, hearing the fear, pull back. They sell. They wait on the sidelines. They feel smart for avoiding the chaos. Fourth, by the time the narrative flips, the infrastructure is already in place. The positions are already set. The early movers are already positioned at the base of the mountain. And fifth, the crowd rushes in at the top. We've seen this with the early internet. We've seen it with mobile payments. We've seen it with streaming. We've seen it with cloud infrastructure. And right now in 2026, we are watching it happen again. In real time. But this time, the scale is different. This time, it's not just a product. It's not just a coin or a company. This time, someone is building the rails, the actual infrastructure that future wealth moves through. And that changes everything about how you should be thinking right now. What time is it where you are, and what are you doing right now? Drop it in the comments. I'm genuinely curious who's watching this breakdown. Let's be specific because details matter here. Over the last 2 years, Elon Musk has made several pointed public statements about the state of cryptocurrency. He's called specific projects useless. He's warned about speculative bubbles. He's distanced himself publicly from the frenzied retail enthusiasm that has defined so much of the crypto narrative. And the media ran with it. Musk turns on crypto. Elon says it's all a scam. The crypto dream is over. That was the headline machine working exactly as it was designed to. Now, here's where most people stopped paying attention. Here's the part nobody's paying attention to. Because while those headlines were circulating, X was in the middle of one of the most aggressive financial licensing campaigns any tech company has ever undertaken. By the end of 2024, X had secured money transmission licenses across dozens of American states. That's not a social media company move. That's a payment processing move. Then came X Money, a feature that lets users store funds, send money, and connect debit accounts directly inside the platform. Then came whispers of trading integration, asset management, possibly even tokenized instruments built natively into the X ecosystem. Now ask yourself this question. Why would a man who calls crypto a scam spend hundreds of millions of dollars building the infrastructure to handle, transfer, and potentially trade financial assets? That question should sit with you, because the answer is either extremely boring, or it is the most important financial story of this decade. I want to talk about contradictions for a second, because in normal life, contradictions mean someone is confused or dishonest. But in markets, contradictions from powerful people are often signals. Think about how many times you've heard a major institution say one thing publicly while their own trading desk was positioned in the complete opposite direction. Think about how many times a CEO has downplayed a product cycle right before it became the company's biggest revenue driver. Public words serve a purpose. That purpose is rarely to inform you. Smart money doesn't listen to words. It reads behavior. And the behavior here is building. Not dabbling, not experimenting, not testing the waters. Building. X has a stated ambition, one that Elon Musk has repeated in interviews, in posts, in shareholder communications, to become what he calls an everything app. A single platform for communication, commerce, content, payments, and this is the critical part, financial activity. Now think about that word, financial activity. That is deliberately broad. That is intentionally ambiguous. And that ambiguity is doing a lot of work right now. Hit Like, if this is starting to make sense, because we're just getting to the part where everything connects. Let me paint you a picture of what X is trying to become. Not what the media says, not what the critics say, what the architecture says. Imagine a single application where you can message anyone on the planet. Inside that same app, you can pay them, not send a payment that gets processed in 2 to 5 business days. Instant, frictionless, borderless. Now inside that same app, you can also buy and sell assets. Stocks, possibly. Commodities, potentially. Tokenized real-world assets, that's where it gets interesting. And if crypto, or a regulated institutional version of digital assets, gets woven into that infrastructure, then you are no longer talking about a social media platform. You are talking about the single most powerful financial distribution network ever built. Because here's what most people miss about financial power. It's not about owning the assets. It's about owning the pipe the assets flow through. Visa doesn't own most of the money it moves. It owns the network. SWIFT doesn't own the capital. It owns the communication protocol. The New York Stock Exchange doesn't own the stocks. It owns the exchange. And if X becomes the exchange, the place where hundreds of millions of people transact, trade, and store value, then it doesn't matter what gets traded on it. The platform wins every time. This is where smart money is already moving. Not into coins, not into hype cycles, into infrastructure. And now here's the part that should make you genuinely uncomfortable. Let me walk you through the classic playbook, because this isn't the first time this has happened, and it will not be the last. Step 1, manufacture doubt. Get the loudest voices, media, influencers, even the very people building the infrastructure, to cast public doubt on the space. This creates selling pressure. It creates exits. It drives out the impatient money. Step 2, let retail panic. When people hear scam, they don't investigate. They react. They sell. They tell their friends to sell. They congratulate themselves for being rational and careful. Step 3, build quietly. While the crowd is exiting, the infrastructure goes up. Licensing, partnerships, engineering, legal frameworks, regulatory relationships. All of it, quietly, methodically, out of the news cycle. Step 4, control the re-entry narrative. When the infrastructure is ready, the narrative flips. Suddenly, the same asset class that was called dangerous becomes the future of finance. The same platform that was experimental becomes essential infrastructure. Step 5, massive inflow, but now through your rails. The crowd comes back, enthusiastically. And this time, every transaction, every trade, every stored dollar flows through a system you built while they were gone. By the time retail shows up again, they're not just late to the asset, they're now a customer of the infrastructure they helped build by panicking out. Think about that for a moment. Comment below if you've ever sold something in a panic and watched it run without you. You don't have to name the asset, just drop it in the comments. Because this pattern has hurt almost everyone. Let me give you 3 clean examples, because I don't want this to feel like speculation. Example 1, the early internet. In the late 1990s, the dot-com crash wiped out trillions in retail wealth. The narrative was clear. The internet was overhyped. It was a bubble. It was a scam. While retail was filing losses, a quiet group of companies was laying fiber, building cloud architecture, acquiring domain infrastructure, building the pipes. A decade later, those pipes were worth hundreds of billions of dollars. The internet wasn't a scam. The first wave was overpriced. The infrastructure was real. Example 2, gold in the early 2000s. After years of being called a barbarous relic and irrelevant in a modern economy, gold sat flat while institutional money quietly accumulated positions. Then came the 2008 financial crisis. Gold ran from roughly $300 an ounce at its lows to over $1,900 by 2011. The people who understood the infrastructure and the underlying store of value mechanics were already positioned. The people who listened to the public narrative were watching from the sidelines. Example 3, Bitcoin itself. In 2018, after the first major retail mania peaked, Bitcoin crashed by roughly 80%. The narrative was overwhelming. Dead. Over. Scam. Tulips. Meanwhile, institutional custody solutions were being built. Bitcoin ETF applications were being filed. Mining infrastructure was expanding. Lightning Network development accelerated. By 2024, Bitcoin had a spot ETF. By 2025, it was being discussed as a legitimate reserve asset. The people who understood that the infrastructure was being built, not abandoned, made generational returns. Now here's the part that should make your stomach tighten. Everything I just described, those were asset cycles. What's happening now is something bigger. Because in every historical example I gave you, the infrastructure was being built around an asset, around a thing. What X is building is infrastructure around the transaction itself, not around Bitcoin, not around stocks, not around gold, around the act of moving value between humans. And that is a fundamentally different game. Here's why that matters. If you own the platform where value moves, not a specific type of value, but all value, then you don't need to bet on which asset wins. You win regardless. Bitcoin becomes dominant? X is the exchange. Tokenized real estate takes off? X is the exchange. Digital dollars become the norm? X is the exchange. AI-generated economic activity creates new value systems? X is still the exchange. This is why the crypto is a scam narrative from someone building a financial platform is so strategically interesting. It's not a rejection of digital value. It's a rejection of the current chaos in favor of a controlled, centralized, institutional version of the same technology. And there is a massive difference between decentralized crypto chaos and controlled financial infrastructure. Guess which one governments are comfortable with? Guess which one institutions will route their money through? Guess which one gets regulatory support? Now you see the game. What would you do if this actually plays out exactly as I'm describing? I want to know. Drop your honest answer in the comments. I want to be careful here, because what I'm about to say is uncomfortable. But this channel was built on saying the uncomfortable things clearly. If one platform, one privately controlled application, becomes the dominant infrastructure for human communication, financial transactions, asset trading, value storage, then what you have is not just a company. What you have is a new kind of financial sovereignty. Not a government, not a central bank, something more fluid than that. A platform with more users than most nations, with more daily financial transactions than most banks, with a direct line between the platform's owner and the levers of economic activity. Now, I'm not here to tell you whether that's good or bad. That's a separate conversation. What I'm telling you is that it represents a concentration of economic infrastructure that has no modern parallel. And the people who understand that early, who understand that the real play isn't the coin but the conduit, are going to be positioned very differently than the people who are still arguing about whether crypto is real money. This is where things start to break down for the conventional understanding. Because if you've been watching the space through the lens of which token wins, you've been watching the wrong game entirely. The lens should be who owns the system that future tokens, or digital dollars, or whatever form value takes next, will flow through. Here's the honest reality of where we are right now. As of early 2026, most retail investors are still in one of two camps. Camp 1, still burned from the last crypto cycle, skeptical, watching from the sidelines, telling themselves they'll wait for clarity. Camp 2, chasing the hype cycle, buying whatever's trending, not thinking about infrastructure, thinking about price. Neither of those camps is thinking about the right thing. The right thing to watch is whether X successfully completes its regulatory framework for financial services. The right thing to watch is whether major payment processors, or banks, or asset managers begin to integrate with X's financial layer. The right thing to watch is whether the platform begins to attract institutional transaction volume, not user engagement, but financial activity. Because when those dominoes fall, the narrative will flip. And when the narrative flips, the window to understand it early will close, not because the opportunity disappears, but because the price of understanding it, in every sense, goes up dramatically. The retail window for early positioning in any major infrastructure shift is always limited. It stays open while the story is confusing. It stays open while the skeptics are loud. It starts to close when the institutions finish their due diligence. And by the time it's the top story on every financial channel, the smart money already arrived. They're already at the table. Are you positioned, or are you just watching? Subscribe if you want to stay ahead of what's coming, because this is not the last piece of infrastructure that gets built quietly while the media argues about narratives. Let's go back to the beginning. Elon Musk calls crypto a scam. The media runs it. Retail reacts, price drops, skeptics feel validated. Meanwhile, financial licenses are secured, payment infrastructure is deployed, engineering teams build the transaction layer, partnerships form quietly. The trap isn't that crypto is good or bad. The trap is that you spent all your energy debating the asset while someone else built the system it moves through. That is the game. That has always been the game. The people who win in any major economic transition are rarely the ones who guessed the right asset. They're the ones who understood the structure that was being built underneath all the noise. Early internet investors who bet on fiber won bigger than most dot-com speculators. The banks that built mobile infrastructure won bigger than most fintech apps. And whoever builds the dominant transaction layer for digital value, regardless of what form that value takes, wins bigger than anyone currently arguing on social media about which coin is best. This is exactly why this matters right now. Because the window to understand the structure is still open. The noise is still loud enough that most people are distracted by it. But the building never stopped. And I want to leave you with one more thing before we close this out. Because everything we just covered, the pattern, the infrastructure, the retail trap, it all points to a single uncomfortable truth. The financial system has never rewarded the majority. Not because the majority is unlucky, but because the majority follows narratives instead of studying structures. The narrative says crypto is dead. The structure says the rails are being built. The narrative says wait for clarity. The structure says clarity arrives after the window closes. And here is what decades of market history tell us about those two groups. The ones who followed the narrative, they participated eventually. They just participated late at higher prices through someone else's infrastructure. The ones who studied the structure, they didn't always get every call right, but they were in the right position when the shift happened. That gap between narrative followers and structure readers, that is the gap this channel exists to close. Not for everyone, but for the people willing to look past the headline and ask the harder question, you're here. That already puts you ahead. Next time you see a headline, any headline from any powerful figure about any financial topic, don't just ask what was said. Ask what's being built. Ask who benefits from me reacting to this narrative. Ask where's the infrastructure going? Because that's where the real signal lives. Not in the headlines, not in the noise, not in the price of whatever everyone is currently arguing about. In the structure. In who owns the rails when the next train runs. If you've been watching this channel for a while and this video finally made the whole picture click, do me a favor. Drop the word rails in the comments below. Just that one word. I'll know what it means. And I read every single one. And I want to know from you, what should the next deep dive be? What's the topic you feel like nobody is explaining clearly enough? The market pattern, the financial shift, the infrastructure story you want broken down the way this one was? Tell me in the comments, because the next video will be shaped by what this community needs most. Share this with one person who needs to see it before the window closes. Not because it makes me feel good to say that, but because this kind of thinking is genuinely rare right now. And the people who think this way early tend to end up in a very different position than the people who discovered it late. This is the Wealth Continuum. Stay ahead.